Three major stories shaking markets and geopolitics today. A deepening fuel shortage crisis in Cuba tied to U.S. sanctions, U.S. tariff revenue exploding as the Supreme Court eyes a key decision, and growing legal battles between U.S. investors and the South Korean government. Let's break down what's happening and why it matters. Bottom line, what started as geopolitical pressure has morphed into a humanitarian and economic emergency, with ripple effects on travel, power, and daily life for millions of Cubans. Recent actions by the Trump administration, including an executive order that labels Cuba a national security threat and threats to impose tariffs on any country supplying oil to the island, have effectively cut off most traditional fuel sources for the island's economy. The immediate consequence has been dramatic. Cuba has now run out of jet fuel at major airports, forcing airlines to cancel flights and reroute planes because they cannot refuel on the island. Historically, Cuba depended heavily on shipments from Venezuela, which has ceased exports after geopolitical intervention, Mexico, which stopped oil shipments under tariff pressure, and Russia, whose future supply remains uncertain. The economic impact has spread beyond aviation. With fuel scarce, power outages, rationing, transportation disruptions, and constraints on hospitals and basic services are becoming widespread. Many Cubans are comparing the situation to the special period of the 1990s, a time of extreme economic hardship after Soviet support ended. At the same time, Allied countries are stepping in with humanitarian support. Two Mexican Navy ships carrying supplies recently docked in Havana, and Russia has discussed potential fuel shipments, though official timelines and quantities remain ambiguous amid diplomatic caution. In U.S. fiscal news, tariff collections have surged dramatically. In January alone, customs duties brought in around $30 billion in revenue, contributing to a fiscal year-to-date total of roughly $124 billion, a roughly 300% increase from the same period last year. These elevated tariff revenues stem from reciprocal tariffs imposed by the Trump administration beginning in 2025, designed to leverage U.S. trade power and push for more favorable terms with trading partners. However, this windfall comes with controversy. A Supreme Court case is now weighing the legal authority that underpins these tariffs, specifically whether the executive branch exceeded its powers in levying sweeping duties without explicit congressional authorization. If the court rules against the administration, not only could future revenue disappear, but the U.S. might need to refund billions of dollars collected so far. Economists point out a crucial nuance. Tariff revenue is ultimately collected from U.S. importers, and the cost is typically passed on to consumers and businesses, which means the benefit seen in federal revenue doesn't necessarily translate to a net gain for the overall economy. So while the headline number, a 300% increase in tariff revenue, looks impressive, the broader economic effects are more complex and depend heavily on the Supreme Court's upcoming decision. Finally, international investment dynamics are under the spotlight with a growing legal dispute involving Coupang, South Korea's largest e-commerce platform. What began as a regulatory response to a massive data breach that exposed data tied to millions of customers has now triggered international investor lawsuits. Initially, U.S. investors, led by firms like Green Oaks and Altimeter, filed notices of intent to pursue arbitration against the South Korean government under the U.S.-Korea Free Trade Agreement, KORUS. They argue that regulatory actions against Coupang have been discriminatory and have caused significant losses in market value and investor wealth. Recently, 3 additional U.S. investment firms, Abrams Capital, Durable Capital Partners, and Fox Haven, joined the legal challenge, amplifying pressure on Seoul. These investors claim disproportionate enforcement and regulatory scrutiny compared with other cases, adding weight to their complaint that South Korea's actions constitute an unfair breach of trade protections. This case highlights how corporate governance, data security, and international trade law intersect. If the arbitration proceeds or escalates into broader diplomatic or regulatory actions, it could influence future cross-border investment disputes involving trade agreements and investor protections. These 3 developments, Cuba's deepening energy crisis, the tariff revenue boom tied to a pivotal Supreme Court challenge, and a cross-border investor legal battle involving Coupang, all show how policy, market, and geopolitics are increasingly interconnected. Understanding them together helps paint a broader picture of the forces shaping the global economy today. If you found this analysis helpful, hit subscribe and ring the bell for more in-depth market and international news breakdowns. Drop a comment telling us which of these stories you want to follow up on: the Cuba crisis, tariffs and the Supreme Court, or the Coupang dispute.